Welcome to the Australian Finance Podcast, a podcast for people who want to learn more about their personal finances and get the most from their money. This series is hosted by Kate Campbell from How to Money and Owen Raskovich from Rask Finance.
The Australian Finance Podcast is provided for educational purposes only. The information is general in nature and does not take into account your needs, goals, or objectives. What that means is the information does not apply to you specifically. So consider getting the advice of a licensed and trusted professional before acting on the information. Kate, welcome to this episode of the Australian Finance Podcast.
Where we're dishing the dirt on our biggest investing and money mistakes.
Oh, wonderful. It's, as you can expect, this is an episode about humility and just being candid.
And owning it.
Yes, just owning it. And telling you that we're not perfect and probably no one else is either. So hopefully you can, find some comfort in our loss and maybe even bring up some of your own. So if you're willing to recite some of them and share them with us, you can hit us up at podcast@raskfinance.com.
Yeah, and it's definitely good to make your own mistakes and learn from them, but it's even better to learn from the mistakes of others and not repeat it yourself.
Yes, I like that. It sounds very smart.
Yeah, so without further ado, here are our biggest investing and money mistakes.
There we go. Okay, we're on the other side of that jingle.
Trying his new sound effects, so
new
seem
sound
to
effects.
Be working okay.
Hopefully the button worked. Okay, so why don't we go? I'll go, you go, kind of thing. Okay, so I'll start off with some share investing mistakes that I made. I bought shares in Slater Gordon. This is a law firm. It went from like $2, which is when I bought it, to like $7. At which point I bought some for my family, and then it's now promptly back to like less than 50 cents. So that sucked, and I lost a lot of money from that. That was my biggest and my family's money. It was the biggest dollar value loss I've ever had. And the reason it came undone was there was some weird accounting treatment I won't go into on this podcast, but if you want to know it, you can find me on Twitter and I'll explain it to you. Another one I bought was a company called Newsat, and this company was that sounds too good to be true. It definitely is. This company wanted to put satellites into space, and it wanted to sell the satellite bandwidth to telcos in the military in the Middle East and all that sort of stuff.
Sounds like a really niche market.
Yeah, very high risk, as I found out. So that went to zero. And then there was actually the Sydney Morning Herald later published a video of the boardroom just as they're about to collapse with these two guys about to have a punch on. So yeah, I mean, that probably says it all. Anyway, those are my quick little two. What have you got for us?
Yeah. Okay, mine are a bit more holistic. So the first one is deciding you're going to be a day trader when you've already got a day job. So, I mean, either way, day trading is something that requires a lot of skill and education, and it's not something you just start doing, really.
What were you doing for a job at the time?
I was in the Air Force.
Oh, okay, so you had like one hand on the cockpit and then the other hand on your ComSec account.
Yeah, absolutely.
Okay.
So I more of in like lunchtime.
Oh, right, okay.
I had just discovered ComSec and the fact that you could buy and sell shares, and it was the coolest thing since sliced bread. And I had no idea what I was doing. I hadn't talked to anyone about investing. I was just buying and selling weird things, like a company that made jetpacks. Though I looked at them the other day and I don't think they got anywhere with that.
No, they went bust.
Drones and all sorts of really random stuff. And I was just like buying it, and then as soon as it went green, I was selling it. If it went red of it, I sold it too. So I looked back at the end of that finance. It was a couple of years ago. And I broke even in the end, luckily. It was a good learning lesson. It was probably expensive in terms of brokerage. I would have paid a lot over the year. But so I definitely think if you're going to maybe start with paper trades if you want to just muck around and buy and sell lots of things. There are companies out there. There's the ASX share game if you do want to have a bit of fun over a couple of weeks, but definitely wouldn't recommend.
What about if you just quit your job and go straight to day trading? Is that a fix?
Yeah, nah. I mean, on Instagram, you see the people with their Forex computer setups and
multiple
surrounded by
screens.
computers. Yeah, it's always like 6 screens and wads of cash on the desk. But in reality, the times I've read articles or listened to podcasts interviewing day traders, they have done a lot of research and training to get to that point.
Mm-hmm.
It's not something they did sort of on a whim. Suddenly one day they're making $1 million. That doesn't work like that. So if you do want to pursue that path, good on you, but it's not something you just start doing. I mean, it's not a good way to make money, really.
Mm-hmm. I hear that. And I agree completely. So another one that I did, this is just a really short, sweet one. I bought a car when I was like 19, 20, probably 20. I bought a ute, like a nice ute, using a personal loan. It had like 17% interest.
Was it brand new?
No, it wasn't, which is probably the worst thing because
So you didn't get the nice bow.
It wasn't very reliable, and it was a lot of money. Like I could not afford it. I had to go from bank to bank to bank to get a loan.
What, so 19 grand at 19?
Yeah, it was a lot of money,
That's
whatever
insane.
it was. And then I had to get fully comp insurance, and I had to get it through the bank that I got the loan through naturally. And so, like, this was just a disaster. Like, I had this loan for years. It would have cost me double, I reckon, what... If you factored in like all the extra costs of the car, it would have been double what the actual purchase price was. And that just annihilates people at the most important time of their life financially. So anyway, that's that one.
Yeah, another one is when I was getting into finance and learning about everything, I pretty much went around and tried every single financial sort of share platform and different things. So there's a company called, I think it's BrickX, and you can buy and sell fictional, like imaginary bricks
like
of a
parts
house.
of a company.
Yeah,
a house. Sorry. Yep.
Yeah. So, but I was just trying everything under the sun, and when it came to tax time, because there was just small amounts all over the place, it was very difficult to do my tax return because I had like $1 of income from one company and just I had lots of different statements trying to pull that together at tax time, and it wasn't even big amounts. It took me more time than the money I made, really.
Okay, well that's I to be honest, one part of me says, well, good on you for giving things a try, but the other side's kind of like, yeah, it is a lot of complexity, I guess. It's
better if you do your research and pick a good company and just sort of go with it. I'm now of the opinion that keeping things simple is better. Otherwise, you end up with tons of accounts all over the place, many bank accounts. So I've just been slowly closing everything down in the last few years just to simplify your life, because suddenly you realize you're paying fees in one place if you leave an account open and inactive long enough. And then you just have to... So it's better to keep everything simple and do your research, pick a good product and go with that. And don't try and make your life too complicated.
I like it. Good advice. Okay, so one of the reasons that we're doing this episode is I wrote a blog post for one of our websites, one of the Rask websites the other day, and I gave a whole heap of investments that went really bad. So things that dropped 50% or more pretty much. There's some that have dropped 100, like that one further up the page, which was Newsat. So I've had my fair share of blunders, but there were a whole heap of them. And my point was that they weren't my biggest mistakes. And the biggest mistake is the one that I'm about to get to. And so this is just a simple example of a company. So a few years ago, maybe 5 years ago, I bought shares in a company called Nearmap, which did images, like photos from a plane that flies really low to the ground. And when I say really low, it's still like kilometers up in the air. And it takes really crystal clear images of the ground. So think of Google Maps, but a lot clearer. So clear that you could see a 50-cent piece from the plane and you could see what was written on it. That's how clear it is. And so this company was doing all kinds of great stuff. It had already conquered Australia and had all these customers and said it was going into the US. And I bought it for about 50 cents. And I thought, this is great. This is really cool. Really good long-term future. It's profitable, all that sort of stuff. And I ended up selling shares about 18 months later for, I think it would have been like 54 cents. So it would have been a bugger all gain, right? Because I was just impatient. And then fast forward to now, and it is trading over $3 a share. So my lesson here is that, one, if you make an investment, you've got to be very patient. That's the obvious one. The other one is that don't let the share price tell you what to do with your money. Like, that's not a performance, an indicator of how well you're doing with your investment. But the biggest thing from this from this action is that I worked it out that all of the investments that I made, of all the bad things that I bought and then I've watched fall, just one of my ones that I should have held onto would have outweighed all of my losers. Right? So if you think about that and you think about the share market, you can make 100% loss. That's all you can make, as long as you're not using like loans or anything weird.
Yeah, don't go there.
Yeah. But you can make much more than 100%. Like you hear stories of companies going up 500, 600,000%, whatever. And the moral of this story is that if you find something like an investment and you want to hold on to it, oftentimes it's much better to hold on to it than it is to sell. So my biggest mistake was actually selling businesses or shares of businesses that were actually exceptional, and I got out way too early. So that's a kind of a weird take on an investing mistake, but I think it's a really good one to remember, particularly if you've got ETFs. Doesn't matter if you're individual shares, property, whatever. So I think the same rule applies.
Yeah, and sometimes your biggest mistake can just not taking any action. I mean, you might not put any money into the market, and so you haven't lost any money, but you've lost the opportunity to make a lot more money.
For sure. Morgan Housel wrote this fantastic article, and the headline was 99% of long-term investing is doing nothing. The other 1% changes your life. And it's so true. So something to keep in mind. Have you got any others? I mean, day trading when you've got a day job is kind of makes sense that worry wouldn't work.
Yeah. It's just more thinking like getting swept up in trends and speculative stocks is always a bit of a recipe for disaster.
Have you ever made mistakes like with ETFs or anything like that?
I mean, I don't think so at the moment. I've kind of just figured out my strategy after a bit of research and sort of set it up and slowly adding to it. I mean, I haven't lived through a GFC-like event, so it would be, I think it's going to be interesting to see how I react to that sort of stuff. Because, I mean, the last few years that I have had money to invest, everything's been lovely, hasn't it? It's just been going up. So I think the more mistakes are probably to come, but hopefully from learning from other people's mistakes, and a lot of investors are pretty honest online about the mistakes they make. So I've trying to learn from their mistakes so I don't repeat them myself.
I think that's part of the reason why this is so appealing, this topic, is because everyone makes mistakes. And if you go into investing, doesn't matter what type of investing you're going to do, or you think, even if you think about budgets and the mistakes you can make with budgeting and all those types of things, if you think it's going to be smooth sailing, it's not going to work. Because there's going to be times when things are really difficult. Now, I've given investing lessons. You've given some more holistic personal finance style ones. It's the same. Like we talk about budgets and we talk about people who, for example, set up a budget and they find out that all of their bills are due on the same day or the same week of the year or whatever, and it just falls to pieces. You've got to expect that the unexpected is going to happen. And with investing, it's probably the most visceral thing because you have so much money typically put into your investing, even if it's just super or whatever. People tend to remember because of this thing called loss aversion bias, which is we feel the pain of loss twice as much as the joy of gain. And we think of we think of these instances in our lives, like if you talk to your grandparents or your parents about their super retirement fund during the GFC, they could quickly recall their emotion to that point in time, but they couldn't tell you the next 10 or 12 years that have been the best we've ever seen. So our point with this episode is to let you know that it's okay if you make mistakes. It's okay if you lose money. But the important thing is that you manage how much you lose. You don't put all of your eggs in one basket. We've talked about diversification. We've talked about staying within your circle of competence, understanding things before you sign up, before you sign on the dotted line. All just basic things that hopefully enable you to make, you're going to make mistakes at the beginning, but hopefully those will be less costly mistakes. And then you can snowball that into the future.
And I'm definitely a big advocate of, if you're going to make the mistake, make it yourself. I mean, there's a lot of scenarios where it is really appropriate to get the help of a licensed professional. But I sometimes think if you outsource every single decision when it comes to your finances and your personal money scenario, you don't get to make those mistakes yourself, and someone else is getting paid to make those mistakes. And they learn the lessons, but you don't get to learn the lessons. So I think it's really important to sort of, once you've got the basics, not be afraid of, you might make a mistake, but you'll learn from it and you get to own it and sort of improve your scenario so you don't do that again.
For sure. And that's something that that's probably something you've taught me actually, is that it's really good to make those mistakes and to make them firsthand. Because we're all wiser because we've been through it, right? And the next GFC, I reckon, after we have that conversation, once we have one and we have another conversation, you'll be able to recall some lessons learned, and I'm sure you'll survive it one way or another. But yeah, those things are going to happen. Spoiler alert.
Yeah.
Markets are going to crash. We're probably going to see a recession. It's been as we record this in 2019, it's been about 28 years since Australia has had a recession, the longest streak of any country ever. Doesn't go on forever. House prices don't go up forever. Stock markets don't go up forever. ETFs have risks. Share investing has risks. We always say high risk, high reward, or just risk in general. Like, everything doesn't work out according to plan. So it's okay to make mistakes.
And like the typical advice of buy low, sell high has been around probably since Roman times. I mean, they would have been using that at the markets and things like that. But everyone still seems to make that mistake. And we've made the mistake. So I feel like we're just wired to repeat the mistake of being greedy and then getting scared and selling. But if you can sort of figure it out for yourself and learn that mistake, and hopefully you don't have to repeat it again and again and again if you learn the lesson yourself.
I like it. So, was that your last mistake?
I think so. Yep. I'm sure there's many more to come, but we'll keep it like that for now.
Okay. All right, Kate. Well, that brings us to the end of the episode, and we would like people to share their stories if they have any mistakes that they've made or anything.
We'd love to learn from you as well.
Yeah, we'd love to hear from you. And as always, you can find us if you email us, podcast@raskfinance.com. That's podcast@raskfinance.com. You can ask questions there too.
Yep.
You can find us on social media.
Yep, at howtomoney.online, or I'm on Twitter and Instagram at howtomoneyAUS.
I'm Owen Rask on Twitter and Instagram. So if you want to find us, you can find us there. And yeah, we'll see you in the next episode.
See you guys.